Hi,
Hi, Dale.
Kristian. Are we on your phone or are we on your desktop?
We're on the
Okay.
phone.
Okay.
The key guy never
Okay.
made it
No
in.
problem. Listen, I've been telling the community, and a lot of people do follow your work. They know that you're in the research division of FXCM, and I also acknowledge that your GAN work was spot on for the high in the euro that we had a few months ago. I remember your GAN work was pretty precise within that time window. So now that we've had
Yeah.
a 900 pip decline here, Kristian, unanimous opinion on the euro that all you hear is where you need to sell it. We haven't had even
Right.
any kind of decent Fibonacci retrace all the way down. I mean, the most we had was maybe 23%. I don't even think we had a 38.2 retrace. What's your cycle work
Yeah.
telling you now going into with some of the cycle guys I follow that this week and the week after it's pivotal? Are you seeing
Yeah.
anything that lines up that way?
Yeah. This week is major for me in for the euro and the equity markets in particular. I think financial markets as a whole is a major potential window. I would say here to Friday. Obviously, it coincides with some big potential fundamental catalysts as well with ECB and NFP and all that
I've
stuff.
seen a
But
lot of inflection
um,
points on NFPs, haven't you?
yeah, I mean, I think it's I mean, it's chicken or the egg, I guess. A lot of people see it as well. Obviously your cycle term window is because of the NFPs and things like that. But it's uncanny how months in advance you can see that this is gonna be a big event. But in terms of the euro, I'm kind of at a I'm kind of at a crossroads here because looking at sentiment, it's gotten into what I call the danger
Yeah.
zone. I'm a big follower of the daily sentiment index, the DSI, and last week we touched 6% bulls in the euro. It's a shame. It's a shame I don't have access to my computer. As I could show you, it's been a very good leading indicator of periods
When's the last time we've been this
where
low?
you're starting to get to the tail end of.
When's the last time we've been this low? Has it been quite some time?
Yeah, I think it was that 2011
Okay.
low. We came right off similar levels. So it's significant. I think you look at spec positioning. I think small specs, they're the most short they've ever
Yeah.
been. So when I see that type of thing, obviously I get very nervous. But where I'm kind of at a crossroads here is the fact that this week is important, but also the 24th to the 27th is really key to me for the euro as well. So I've been kind of looking for some sort of maybe a decent snapback or shake the tree a little bit, get a correction into that period, and maybe get a secondary high then. But it all depends how it plays out. Is maybe if we do just knife lower here and go down into that 24th, 27th window, then maybe that'll be the reversal I'm looking for. But I mean, so the way I look at the markets, the fact that we have sentiment and positioning so extreme, I think a important tradable low is not that far off. It's just kind of from which term window does that happen. But I would not be surprised to see it happen this week, to be honest. Just given some of my cycle work on some of the other markets and just how capital flows are related and everything, I could see the kind of the euro being seeing a secondary kind of impact from that.
Okay, interesting that U.S. dollar yen was, made lows about 3-4 weeks ago, a month ago. So I started shorting TLTs when they were about 117, and
Yeah,
the yen kept going up, but yields ignored it until yesterday. To me, I think the market's been as bullish bonds in the last week as they were bearish bonds going into the new year. I'm looking for
yeah.
maybe a pullback in 10-year yields back to 260 to 2 3/4. Are things looking that way? And then perhaps the big move under 2%. What do you think?
Uh, yeah, I mean, the thing is kind of my view going from here to the end of the year. I'm looking for a major kind of a decent tradable high in risk
Yeah.
markets. So how does that translate to the bond market? That's the big question. We're going to get a correlation breakdown. Are we going to see a flight to safety into the bonds? That's kind of where I'm at. And it's also kind of a secondary product that I analyze. So it's for me, it's more what's going to happen with equities and other risk products, and then that'll kind of see what happens in terms of bonds. I'm kind of banking on. I think there's a good chance we're going to see some sort of break away from what is considered the standard correlations. And this might be a long-term effect type of thing, but I don't think it's that crazy going forward. We might see kind of an inversion where stocks are kind of almost seen as a safe haven, and bonds are bonds are the risk asset back. I mean, that could obviously be like a 5-year, 10-year down the line type of thing, but I think things are kind of changing in the way the financial markets work. That type of event wouldn't surprise me going down the road.
So bear market in bonds and a continuation bull market in equities.
I could see that. I mean, in terms of long-term things, I mean, right now I am extremely bearish the equity market right here. I think from now till Friday we're at a major inflection point.
I have a line coming in at 2020. You see anything up there in the S&Ps around that level?
Yeah, I'm right around there. 2018, 2015. Right on that zone. There's actually some interesting long-term relationships right here going back to the 1987 crash low. But for me, it's more about timing. I wouldn't be surprised if we get some sort of spike high. So I've been trying to position it via options. But I mean, in terms of stocks, I think I saw today that newsletter writers, they're the least bearish they've been in 27 years. So it's been very popular to call this market the most hated rally in history. But I mean, it's very loved right now. Everything I hear, I got a note from a very big investment bank yesterday, and they're talking about buying September calls at 3% away, and talking about how the post Labor Day since QE has started always gives us almost a 4% rally in 2 weeks afterwards. So it's kind of one of those things. We're entering a very seasonally negative period, and in the past few years, whenever we come to September, everyone's with the market rallying, everyone's been worried, and they've been saying, oh, watch out, it's September, October, very bad period for stocks. Maybe it's time to take profit. We're not seeing it this year. All of a sudden, everyone's pulling out these bullish statistics, and everyone's very, very bullish in what's been a historically very seasonal negative period. So, I wrote in a note this morning that I think, the way markets perversely work is that, the 1 year no one's looking for a decline during the negative seasonal period is the 1 year we'll probably get it. So, just kind of the way I look at things and, through my lens of the cycles and everything, I think that we're at a risk of selling off. I mean, from a pretty decent amount, I would think at least test the August lows, if not go a fair amount lower.
I was thinking that last break we had was a little over 90 handles. I don't know, about 98 into that low that we had in August, and thinking that a bullish count would be new highs, that this is an irregular B, and if we had a 1.618 of A, would take us down towards that 1850 level. That on your radar screen?
Yeah. I mean, just because putting anything crazy in the downside, gets me hate mail. I'm
not going to talk 600 S&Ps, or you'd have to go into a bunker, right?
Right. But I mean, you just right. I mean, you should have seen some of the comments I got when I suggested the euro might rally late last week.
Let me ask you this. The euro trading right around, I never got to levels, trading right around this 31 area. You have any numbers that are on your watch list that would be an interesting long entry?
Yeah, I put a note out yesterday. I actually put a trade idea last week. But I'm basically looking at, to me, 30.85 to about 30.25 is kind of the key. I just have a lot of support there. And if you do just a simple Fibonacci 50% retracement from the 2011 low to the May high, that comes in right around that zone. The 78.6 from percent retracement from last year's low comes in that zone. Also, I have a lot of GAN relationships related to the May high coming in that area as well. So it's and also I look at standard deviation channels. And the 1 year standard deviation, the third standard deviation comes in around that zone too. So to me, it's a very, very strong zone. So I like, and I tend to, the way I trade personally, I like to kind of scale. I like to buy a little bit ahead of it. Yeah. And if it goes, and I'll get a full position if it goes all the way down, but at least I have something on. And kind of, if we close under 130, which is completely possible, tomorrow is kind of the, anything could happen.
Right. Well, the market definitely has some high expectations built in, doesn't it? I would love to sell. I would love to buy a new low during the press conference of Draghi into your range, and if we get your range, Kristian, could this be setting up a huge rally or just a retracement of the 900 1,000 pip decline and get back to the breakdown around 135, 136.
I mean, that's kind of where I need to see how it materializes, because I do have like an equally important turn window coming up at the end of the month. Like I said, around the 24th to 27th. And that's got a lot of long-term implications too. So, it's kind of how we set up going into that. Maybe we do initially rally, let's say, a couple of big figures, and then come back, and then the end of the month is a retest. Okay. I don't know, but I need to see how we react around this initial pivot zone inflection point, and then I can go forward. I have a tough time. I mean, initially I thought that we would be seeing a secondary high right now.
So they're
into this
inverting
window. Yeah, they are. They seem to be, because I've been pretty negative on the euro. I was calling for kind of a second half euro sell off. It seems to come a little early, so I thought we'd get that secondary high now. But I'm wondering if that ends up coming at the end of the month in that another window coming up. But after that, things get there's a pretty decent period in between until Thanksgiving period. Where there's a good couple months of pretty much nothing major, at least I see cyclically in between the two. So we should get kind of an air pocket in terms of terms of
this week into the end of the month, and then pretty directional. The old saying is Thanksgiving is for the bears and Christmas for the bulls. So maybe that's a scenario. How about cable in here, Kristian? I've seen some wave guys, even though this correction's been deep and relentless, that still say it's possibly a wave 4, and that there still could be a wave 5 coming, which implies new highs in cable.
Yeah, I mean, I wouldn't discount that either, just because if you go look at like a long like cyclical picture of cable, it should be, I actually had a pretty decent call last year when we're selling off, saying, we're supposed to be in an upward ascendancy at the moment in terms of just a longer term cyclical picture, which should last, there's still a few years left in that. So I personally don't think it's quite done yet. So I would subscribe to the LA wave theory. But I've learned through the years, anything to do with when you're looking at sterling, it's always a
day at a time process, buddy.
Yeah, you can't get too much conviction either way. I always call that the professional traders. The professional market.
The widow
that's where you get the most.
Maker.
Yeah, it's basically pros against pros there, and that's where you always get the stop hunts, and it's just a brutal market sometimes. So I personally stay away from it as much as I can until occasionally you get really nice setups. Like last year we had, I look at things like rate of change was at its lowest level in 5 years, and we had a nice turn window, and DSI was at single digits. So when you get like the ideal setup, it sets up nicely, but for the most part, I kind of stay away from it.
Anything?
But, for me, like I said, I'm looking at, for me right now, it's all about the euro and all about the S&Ps. Okay. I think the last time I talked to you, I was talking about S&Ps. I had that mid-July turn window, and we got that. We had pretty decent sell off of that. So I'm thinking this is kind of a secondary test of that primary of the kind of the end of a longer term window. So I think this is a secondary test of it, and it's actually acting very, very well to where it's giving us 2 new highs into that period. So it's a very exciting time, I think, and we'll see if it plays out right over the next couple days.
And anything in the commodity currencies catching your eye? Aussie range bound. The bears aren't being rewarded, the bulls aren't being rewarded. Anything that you see in Aussie that is interesting to you?
Well, the one that's been interesting to me is, I do a weekly webinar every week, and I always get a ton of questions on Aussie and Kiwi, and I always revert back to, I had a really good call with respect to Aussie Kiwi, because that low we got mid-July was exactly to the day almost 8.6 years from the all-time low in 2005. So
that trade, you're looking for a continuation of that trade on the long side.
Yeah, I think we've started in Aussie Kiwi. We've started, I think, a potentially very, very, very strong move up, which obviously, so whenever I get that question, I'm always looking at, I think Kiwi's going to underperform no matter what's going on. I think, and it tends to be whenever Aussie Kiwi was in a decent strong move, it tends to not be good for commodity currencies in general. But that relationship kind of flips around sometimes. But just for the moment, that I felt more comfortable playing it via Aussie Kiwi, just because it seems pretty clear, and the fact that we kind of broke out of that consolidation around 110.50, that zone has been, looks like we're some sort of initial third wave up, which should be kind of the more impulsive leg. So that's kind of what I've been in terms of the com block and the antipodians. It's kind of what I'm looking at.
Great interview, Kristian. Talking to you makes me realize how much I've missed hearing your take. Glad I scheduled you in this time zone because you were spot on at that July time frame. You're right there for the Euro, and here we are talking about the inverse about to occur. So thank you for edifying us today, buddy.
No problem. My pleasure. Always enjoy it.
I'll drop the link. I'll drop the link in your Skype box later.
Okay, perfect. Thanks a lot.
Good hunting.
See you. Bye.